the vast majority of the money in the world is sitting in 60/40 bond portfolios or sitting in real estate. So the traditional money, conventional money, is sitting in a 60/40 portfolio or real estate. The scared money, the traditional scared money, is sitting in gold. The entire industry's been waiting for too big to fail banks to start to custody the asset. And you can imagine if your bank wouldn't let you hold Apple stock, or you couldn't hold a bond, then probably those assets would be less valued. And so bank custody is a big deal. Send a very clear buy signal to traditional investors. 99.9% of the money in the world is held by people that don't have the majority of their assets in Bitcoin. And so that's going to be a big deal. When you move from 99.9 to 99.8 to 99, to 98 not participating, those are mega moves in the asset. We saw credible rumors that will probably turn out to be true over some amount of time, which is that large banks like BNY Mellon have exemptions from SAB 121, and they can begin to custody Bitcoin. The entire industry's been waiting for too big to fail banks to start to custody the asset. And you can imagine if your bank wouldn't let you hold Apple stock, or you couldn't hold a bond, then probably those assets would be less valued. And so bank custody is a big deal.
Bitcoin has just hit a jaw-dropping all-time high of $81,000, and the buzz is real. It could break through the $100,000 mark before the year ends. Michael Saylor, the relentless Bitcoin bull, unpacks why he believes this surge is only the beginning. Please like the video and subscribe to the channel to catch more powerful insights straight from Saylor. Thank you, and enjoy the video.
The third was after the market closed on Friday at 4 p.m., we got an SEC notification that option ladders have been approved on BlackRock's IBIT spot Bitcoin ETF. That's a huge deal, because if you can trade options, you can bring leverage to the market, and that's a new class of investors, but you can also start to hedge the market. And so that really elevates the quality of Bitcoin spot ETFs in the marketplace. So another big fundamental improvement. About a month ago, a fourth improvement is Morgan Stanley approved IBIT and FBTC for solicited sale by 15,000 financial advisors. That was the first major wirehouse to do it. It's inevitable. We're going to have more of their competitors do it. Then I think the fifth is we're barreling toward November 5th. And after November 5th, we're going to have much more regulatory clarity and consistency. There's massive pressure on both political parties in order to bring a digital assets framework to marketplace. And any of that clarity is going to send a very clear buy signal to traditional investors. 99.9% of the money in the world is held by people that don't have the majority of their assets in Bitcoin. And so that's going to be a big deal. When you move from 99.9 to 99.8 to 99, to 98 not participating, those are mega moves in the asset.
It's good for Facebook or good for Google. Let me give you two examples I'd love for you to address. Altcoins and kind of out of control meme coins and things like that. Does that suck does that suck demand away from Bitcoin and over to alternative digital tokens? Given that BlackRock and affiliate banks are kind of doubling and triple down on Bitcoin, might a more restrictive Fed actually help Bitcoin become the clear winner?
Well, I think that if we're talking about the Fed, we're talking about an interest rate policy, and I think the interest rate policy is going to be a bit looser. And so all assets will be a winner with a less restrictive Fed, and I think the writing is on the wall there. I think with regard to regulatory clarity, the real key point here is the vast majority of the money in the world is sitting in 60/40 bond portfolios or sitting in real estate. So the traditional money, conventional money, is sitting in a a 60-40 portfolio or real estate. The scared money, the traditional scared money, is sitting in gold. And so the only thing that Bitcoin needs to win is just to be acknowledged as a legitimate asset class. When money managers like Fidelity or BlackRock point out that this is an institutional grade asset, a digital gold, a digital property, or a digital capital, that's the most important thing that's happened in Wall Street in 40 years. And last week, BlackRock published a white paper where the headline was Bitcoin, a unique diversifier. And they said not only is it a legitimate asset class, by the way, the regulators help with that. When the regulators approve spot ETFs and when they approve options trading, they're signaling to all these traditional old money investors that this is not tulip bulbs, this is not a scam, this is legitimate. So they do their part by showing it's legitimate, but BlackRock does their part by pointing out it's a unique diversifier. Everybody in the world, if you look at high net worth families and portfolio managers, they're looking for the great white whale. The Moby Dick of investment is an uncorrelated asset which will perform. They want something which is not correlated to bonds. They don't want it correlated to risk assets. They call it alternative investments. You know, big banks have conferences for alternative investments because anybody in the world can buy a bunch of stocks. You know, it's pretty obvious. You can buy them in 15 seconds. So they end up doing things like buying portfolios of timber rights, you know, or natural gas pipeline, you know, rights of way, or the classic, you know, great alternative investment for the last 100 years, just real estate. I just buy some scarce desirable land because I feel like when my stock portfolio crashes, I want something else which is not going to crash at the same time. So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated. So if it's not correlated, that means the 60-40 portfolio can be replaced with a 55, 35, 10 portfolio. And so do the quick math on what happens when 10% of hundreds of trillions of dollars flows into an asset that only has 450 Bitcoin a day available from natural sellers. That's $25 million a day of natural selling. It's not that much. And so when people reallocate their investment portfolio, then that's very bullish for the asset class. And all this regulatory clarity, like, well, I mean, regulations mean different things to different assets for sure. But Bitcoin is a very simple principle. It's like just digital capital. So I've said before, it's like it's either going to zero or it's going to 1 million, because if it's tulip bulbs and if it's not legit, if it's a scam, it's just getting regulated out of existence, right? But if it's legitimate, it's basically everybody's holy grail. It's like basically the font of eternal youth for investors. It's the thing everybody wants, a high performing asset not correlated to the rest of their portfolio. You don't even have to have to agree that you understand it. You just have to agree it's legitimate and it's uncorrelated. And at that point, a portfolio manager says, well, just give me some of it.
That's a wrap. Bitcoin is reshaping global finance and opening doors to freedom for everyone, as Michael Saylor believes. What do you think? Drop your thoughts in the comments section below, like, and subscribe to the channel for more videos like this. Thanks for watching and see you on the next